warning signal. Oracle sold off after earnings. Broadcom did beat expectations and still dropped. And at the same time, the Federal Reserve Bank just cut interest rates. So here's the real question. Are AI stocks at a turning point, or it's just some noise before the next big move upward? Stay with me because this matters to traders right now. In the next 10 minutes, I'm going to break it down clearly and honestly, and you will see what the Fed actually decided this week in plain English, what Oracle and Broadcom earnings really tell us about AI stocks, a fully transparent look at my own trading portfolio, including a drawdown, and how I am thinking about the next big move going forward. No hype, just real data and real decisions and real risk management. Quick disclaimer before we continue, this video is for educational purposes only. I'm not no financial advisor. I'm sharing how I am personally analyzing and managing risk in this highly volatile market. So let's jump right into it. On a quick personal note first, I was recently traveling in Europe, and including the time that I was in the cruise, my internet was very limited and I intentionally did not trade. Because good trading isn't about always being active at all times. It is about being patient, focused, and trading in the right environment. The cruise ship just didn't add to be that kind of environment I would be comfortable to trade. So I'm back in Canada now, still recovering from jet lag though, and this is where things stand. Let's look at the portfolio update. Starting with real numbers, my current portfolio snapshot is that the total equity is about 65,800 Canadian dollars. I'm holding $61,600 in cash, and this is all in Canadian dollars. And my current market value invested is around $4,100, and my net deposits are just under 49,600 Canadian dollars. Right now, my profit and loss is down to about $2,600. That means some positions are temporarily underwater. But zooming out, since inception, I'm still up about over 32%, still beating the S&P 500. But for context, I started this account with 21,800 Canadian dollars, and after trading and having about 78% return for about that amount, that 21,800 that I started with. I withdrew 300 Canadian dollars. But then since I felt confident that I had tested my methods and it was time for me to scale up and increase the position size for my trades, I then decided to add a 20,000 US dollars. So that's why my average actually then it dropped to about. I'm going to be very careful so that at least at the end of the year, my profit and loss still will be on the positive. Now, the lesson from this experience is that real investing and real trading is like this. Not every week is green, not every week is red, but I like to stay afloat and make sure that I play defensive every time and continue to protect my capital and have these incremental gains consistently. Now let's look at the Fed rate cut. From a macro perspective, on Wednesday, that's when I was traveling back from Greece, the Federal Reserve Bank cut interest rates by 25 basis points, and that brings the policy rate to a range of within 3.5 to 3.75%, the lowest it has been in several years. So according to the Federal Reserve Bank's official statement and Chair Jerome Powell's press statement, the Fed is now closer to what they consider to be the neutral rate. So Powell emphasized the three things. Inflation is still being monitored. The labor market is cooling. The future rate cuts will depend entirely on incoming data, which I think makes sense. But the key thing is that this was not a panic rate cut. It was a measured adjustment, and that distinction matters. So let's talk about Oracle earnings. Oracle reported strong numbers. Revenue was up 14% year over year. Cloud revenue up 34%. Those numbers come directly from the Oracle's earnings report that I looked into. So on the surface, fundamentals look solid, but I saw that the free cash flows from what I saw on stock analysis, they were negative. So that was something that I thought was interesting, even though most of the years the free cash flows for Oracle are solid. They have a lot of cash on their balance sheet and they don't have extremely high long-term debt. So I think it's still a very strong stock, but yet the stock sold off. The fundamentals, in my view, like I said, they are still solid, but because expectations were extremely high, in my opinion, the guidance didn't impress Wall Street enough. This is an important lesson. Good earnings do not automatically mean a higher stock price, especially in the AI. Now, before we move on to Broadcom, make sure you subscribe and follow me for more quality analysis. Now, Broadcom did report earnings. It did beat expectations and showed a massive AI demand on their report. That's straight from their earnings report and coverage by Barron's as well. So regardless of this stock still dropped. Why? Because margins are expected to tighten as AI becomes a larger part of the revenue. And I think that potentially poses a risk. So probably that's why investors and traders sold off on this stock. So this week we saw Oracle selling off after earnings. Broadcom, it also sold off even after a bit. That tells us something important on AI stocks right now. Is this the turning point? Well, in my view, this doesn't mean that AI is dead. I think AI is here to stay. What it means, in my view, is that the market is becoming more selective and the expectations are becoming extremely high. And I think most of these stocks have really run quite up. So it's very, very important to be careful because I believe some stocks are quite overvalued. And anything that comes less than what is expected in the earnings could see increased volatility and stocks dropping like what happened to Oracle and Avgo in this case. That is Broadcom. And that's when discipline matters. So moving forward, let's talk about my next trades and strategy. Currently, I have two cash secured puts for Celestica and Oracle. So if on Monday, this is when this video is going to go out. I'm recording it on Sunday. Today, I'm going to close the positions if I see some profit because that's how I manage risk. I see profit, I like to take profits off the table and do that again and rotate that process. So that's how I am positioning myself. I want to look for defined risk setups, companies with real earnings power, and avoiding emotional trades that are driven by headlines. So I think this market requires one to be very careful and thoughtful in terms of the process because I think still there are a lot of overvalued stocks. So imagine if the market starts to drop, so you don't want to be caught up in that situation and lose a lot of money. So patience is part of my strategy. I will be looking at stocks that will be right down at the Bollinger Band so that I can consider some entry points. And hopefully, if the market is up, I will close the position, have some capital that I will be able to deploy and rotate my profit. I want to recycle, repeat, and make profit whilst protecting my capital. So if this helped you think more clearly about the market, hit subscribe and turn on notifications. I post honest market updates like this every week, even when things are not perfect. If you want deeper help with your trading and investing strategy, risk management, and building a plan that fits your life, especially that we are going to be starting a new year in 2026. Check out my coaching programs on www.streetwiseeconomics and drop a comment. Do you think AI stocks are resetting or just it's a pause? Thank you, and I'll see you in the next one. Bye bye.